Thierry. Thanks for hosting this. When you approached me, I don't know, a month and a half ago, maybe. Oh, there we go. When you approached me a month and a half ago, I was enthusiastic to do it because, I'll tell you my story in a few minutes, but I've been at this for quite a while, and I'm always very happy to help fellow Canadians penetrate the circles of tech success, and in Silicon Valley and outside of Silicon Valley, increasingly outside of Silicon Valley. And in fact, I spent the last 20 years in the Valley, but actually I'm out at a place south of Lake Tahoe right now because I don't really need to be local anymore. You can work from anywhere. And the company I'm running now is a virtual company. Most of my people are either in Austin, Texas, or in Sweden. And so I can really be anywhere. So that's the beauty of it. But as Thierry said, maybe before I get into an introduction, just to reinforce, the goal of this is really to have an interactive session between us, right? If it was just going to be me lecturing for an hour and a half, then Thierry could mail you guys a couple of books to read. You can read the books, and then that'll be fine, right? The goal is actually, because some of the frameworks and things we're going to cover today in the next few sessions, I've lived them for the last 20 or 30 years, actually. I've been there, done that multiple times. I know what works, what doesn't work. And so, although I'm going to be using some pretty standard frameworks, some of these you heard and maybe have used before: SWOT analyses, technology adoption lifecycle analyses, lean canvas, all these things, you're probably familiar with them. You maybe haven't tried to use them in the real world 4, 5, 6, a dozen times like I have. And that's really the value that I bring to this thing. It's not as a generic university lecture at the front of the class, it's to have a conversation. So please do, raise your hand. I may not, because I'm not able to see everybody at the same time. Thierry, you might please feel free to interrupt if somebody has raised their hand and wants to verbally ask a question. At any point in time, let's have that verbal discussion back and forth. If you're, too shy or you're not in a place where you can easily use your mic to ask a question, type it into the Q&A box, and I'll address it from there. All right, as Thierry said. So if this isn't interactive, frankly, we're sort of wasting your time. Just give me your address. I'll email you a couple of websites. You can read about it there, and then we'll save ourselves all a bunch of time here. So now to my intro. So Blaine, Mathieu, or Mathieu, if you were a French Canadian like I am originally, although I was born in Alberta and in a French family, but really raised English. Started my first software company in Peace River, Alberta, 300 miles north of Edmonton when I was 12. Wrote the code for in Pascal and assembly language for a fixed asset management and accounting system that I sold to large enterprises across Canada as a teenager, actually. That put me through my first undergrad degree at the U of A, did a business degree. At the time, I thought, computer science, I know more than those guys do. Why would I do a computer science degree? And now in hindsight, I think that was a mistake, because I'd spent most of my teenage years writing code, but I certainly did not know a lot of the theory of computer science, which I've tried to learn more of over the last 20 or 30 years. But other than, my youthful experience, let's just say I've spent most of my time on the sales and marketing side. So I was brought down to Silicon Valley in '99 to be Gartner's first internet analyst. Actually, at the time, I had a website called killerstrategy.com, which was, if you type e-commerce or online marketing or web strategy in the late 90s and into the early 2000s, my website came up first for many years. And I was doing a lot of work on analyzing Amazon.com and what Amazon was bringing to market and how their business model worked. And I got a call in the same week from Amazon. They had about 100 employees at the time, and Gartner. Gartner wanted me to move to Silicon Valley to be their first internet guy, because they were getting killed by Forrester Research and some of the more internet-oriented analyst firms. And Amazon called me up, basically saying, "Why are you writing all this stuff about us and publishing it? Do you want to work for us?" And I asked my wife, "So do you want to move to Seattle or Silicon Valley?" She said, "Definitely California." So we moved to California in '99, and the rest, I guess, as they say, is history. Since then, I've been As Thierry said, I've been a chief marketing officer at multiple companies, pretty well all enterprise-oriented B2B software companies. And I know I took a quick look at the websites of the group here. We've got a wide range of business types, business models, and so, which is great. That will require me to generalize some of these things a little bit more, because some frameworks are more specific to different types of businesses than others, but don't worry, we'll be covering a lot of bases in this. But my personal career has been mostly on the B2B side, selling to mid to large size enterprises, software predominantly. In the old days, it was literally boxes of software. You used to be able to buy software on discs. I don't know if you guys are familiar with that. But of course, now it's all the SaaS transition and everything else that is into the cloud transition. And I've been a CEO a couple times before. I've been a CEO of a NASDAQ listed public software company as well, a company called Selectica. And about 7-8 years ago, I began to really get into IoT, Internet of Things, AI, machine learning, and they think the natural next evolution of that is to edge computing, because you cannot be, although the last 15 years have been about putting software and data into the cloud, I think even my former colleagues at Gartner are saying the next 10 or 15 years are going to be about doing more analysis close to the edge of systems or networks where the data is being generated, because if you have to take actions in real time, you can't really be putting that data up into the cloud. Cloud is great for some things, AI model training, long-term data storage, analytics, that kind of thing. But some things need to be done on the edge. And so last year I was working for a venture capitalist called Momentum Partners that had funded about 50 or 60 companies in the space. I was helping those companies with their go-to-market models, product strategy, core pricing, all that kind of good stuff, the stuff we're going to be talking about a little bit over the next few weeks. And Protexo, my company, found me there, tried to hire me as a consultant to help them, and they could never afford my rate. But I said, I'll tell you what, I'll come work for you as your CEO at 1/4 what I would charge you as a consultant, and you can get me full-time instead of part-time. And they thought that was a pretty good deal. So I ended up moving to Protexo virtually. I guess I didn't move anywhere, but moving to the Protexo company as of January this year. And here I am. So that's my story, I guess, in a nutshell. And really great to be with you all today. I'm so excited to be able to, give something back to my Canadian brethren. And I am a Canadian citizen. In fact, on Friday, 2 days from now, I'm flying to Kelowna, British Columbia, and to visit my relatives and family for the first time in 2 years, now that Canada has finally opened up the border again. So that'll be exciting. And the next one of these we do next week, I'm actually going to be doing it from Kelowna, British Columbia. So there you go. I am a true Canadian, but I'm also a US citizen as well. So I can get maybe a little bit of both. Any thoughts or questions about that before we dive in?
Welcome.
All right, good stuff. So, and again, one final time, if I don't see questions popping into that Q&A panel or hands being raised, oh, there you go. Thank you, Mason, for the first question. All right, I'm going to send you a little some Protexo good tchotchkes here to reward you for being the brave in us, for asking the first question. Thank you, Mason. Good for you. And there may be more prizes. There could be more even coming out of this. Maybe the best question. There should be a prize for the best question, I think, today. So try to think of really good questions and we'll get that going. Actually, I see Andre has his hand up. Andre, go ahead. I want to hear your question verbally. Can you unlock him, Thierry? Is that, do you have to do that or how does that work?
Go ahead, Andre.
Yeah, and Andre took his hand down pretty quick too. So there you go. Okay, Andre, if there was a problem with making the verbal questions thing work, let us know in the chat, okay? And then Jerry can work on it, offline while we're doing this.
Yep.
All right. So let's between the chat, the Q&A panel, and the verbal questions, I think we can make this all happen. So I did get a question from Mason. I'll maybe address it quickly before we get started on a little bit more about the edge. It is interesting, and it's relevant to most of the companies here because most of you have cloud-based solutions. Your, SaaS software solutions running maybe in AWS, probably in AWS, possibly the Google Cloud or in Azure. And for most of the last 10 or 15 years, we've been figuring out how to run software multi-tenant by getting data pushed up to clouds. And for things like CRM systems, HR management systems, ERP systems, there's a lot of types of software, and many of you are either in these businesses or adjacent to them. That model makes perfect sense. But we're also seeing, obviously, just a boom in, devices, right? I'm holding up my phone there, you can't quite see it. Whether they're personal devices, Fitbits, smart rings, or whether they're industrial devices like machines, motors, everything has sensors on it, right? The average oil rig now, a land-based oil rig, generates 2 terabytes of data every day from the IoT devices and sensors that are on that rig, right? The average hospital, right, in Europe, I haven't seen the US data, the average European hospital is generating something like 500 terabytes of data from the IoT devices that are now running in that hospital. Obviously, you cannot push that all up into the cloud and do anything meaningful with it. You have to be able to process it locally. And so many new application companies we're seeing and that I'm talking to are figuring out to run at the very least a hybrid model. So some of their application is running in the cloud, and some of their application is running locally, say in the hospital, so that you can help the hospital take action in real time based on what the sensors, devices, machines, monitors are doing in that hospital right there. We're also seeing increasingly, due to privacy laws or data security concerns or those kind of things, a lot of data is being blocked from being sent to central cloud-based applications. And right now, Europe is the leader in that. But it's coming to the US. Every time an oil pipeline goes offline for 2 weeks or the power grid goes down in California, these systems get further locked down, which makes it harder and harder for cloud-based applications to be able to function. If you can't get the data up to the cloud, then how's it going to function, right? So the edges and edge computing platforms are helping to solve that problem. So hopefully that wasn't too much of a digression. I think it probably is. It's a major trend that's going on in IT right now. And if your company is based on riding the cloud wave that happened over the last 10 or 15 years, well, just be aware, there's another wave coming. And I'm not just saying that because I'm CEO of Protexo. Gartner is saying it, IDC, all the industry analysts are saying it. This is absolutely happening.
Blaine, we have one more question. We have one question, but I'll queue it up for the end since it's not directly related to what we're talking about here.
Sure. Okay. I see that one. So let's save that one to the end. Let's dive in. But do keep sending the questions. Perfect. Okay. Host disabled screen sharing. I think you have to let me share my screen, Terry. Still disabled. While we're waiting, the one question was around moving from Silicon Valley toward home environments, leaving Silicon Valley. Is Austin or Miami becoming a hub? There's no doubt about that. As I said, half of my company is in Austin. And to be frank, I'm building it there on purpose because, thank you, Terry, I see I have the rights now. Because Austin is much easier both to find talent and affordable talent. Silicon Valley is a bit insane. It's been for years, and it continues to be that way. And I'll be, honest. I think if I've got my Silicon Valley buddies here, I might get in trouble for this. But I basically have a mandate that I'd say it's not zero probability, but I'm very unlikely to hire somebody who's located in Silicon Valley right now. For reasons of, just they're hard to source, but even if I find somebody, if I have an engineer living in Mountain View versus one living in Austin, the Mountain View engine, the Austin one is going to be just as good probably, and probably cost me 20 or 30% less. And it's not even about cost. It's about being cherry picked by the next hot startup. I'll tell you, unless you're Google, Facebook, or Apple or a few others, it's getting very hard to compete for talent in the Valley. These guys pay super large salaries. They got amazing benefits. It's a tough environment to exist in. So yeah, whether it's Austin, Miami, Toronto, Vancouver, right? Look at Toronto and Vancouver. Those are just booming markets right now for tech startups. If I was doing another startup today, starting it from scratch, I would seriously look at actually doing it in Toronto or Vancouver. That's probably would be one of my first choices for where I would look today. Of course, I have the ability to do that because I could live in one of those places, and you probably all do too, because you must be Canadians or you wouldn't be on this call. All right, let's get rolling here. I'm going to share my screen again. I think this is fine. We don't only have to talk about go-to-market. We can talk about any tech issue, and you know, I've got a lot of things that we can talk about. So perfect. So you're seeing on my screen, I believe, the curriculum outline. Is that what you see, Terry? Yes. Okay. Good. Yep. So today we're going to talk primarily about market landscape. I'm going to get into SWOT. You probably think, oh, I know what the SWOT analysis is. I've done it before, but I'm guessing you haven't seen this version or level of SWOT analysis. So I'm going to take you through that. Then we're going to talk about my favorite framework in the world, the technology adoption lifecycle analysis, Jeffrey Moore, Crossing the Chasm. I'm sure most of you have read the book. I've probably read it, you know, 10 times now, because every time I go into a new company, into a new market, it's like a new refresher on what you need to learn. So we're going to, again, take that to another level. Next time, we're going to talk more about company positioning overall, really critical to company success. I think probably, you know, many failures are caused by improperly positioned company, or a company, yeah, and related to that, I guess, is a company where you have a positioning and it's not enabling you to find product market fit. So we're going to talk about positioning next week. And then the final week is about go-to-market. So let's assume you've analyzed the landscape, you position your company appropriately, or at least enough to test it and get a hypothesis for what it might be, because it's never perfect. Then how do you actually bring the thing to market? Some, you know, tips and techniques in terms of that. Each of these things could be a 4-month-long, university course, right? Which I'm not volunteering to do, Thierry. So this is all I have the time to do right now. In fact, if my board knew I was doing this, I'd probably get in trouble and say, "Where are you working on for Texo right now?" But I'm doing it for Canada. That's why I'm doing it. But so we're going to, again, more about tips, tricks, techniques, answering the questions that you've got. That's what this is all about. My goal is not to do a university lecture. So let me share the next thing. Let's get started. Why don't we start with SWOT? Here we go. Okay. So how many of you have done a SWOT analysis recently for your businesses? Oh, about half of you. That's cool. All right, excellent. So we're going to talk about how the SWOT analysis grows up. Okay, taking this thing to the next level. I presume you can give me the thumbs up, Terry, if you can see the slide here right now. Just want to make sure. Yep. Okay. Perfect. So what is it? Wow, this was when I did my MBA way back in the dark ages. I think it was the 80s. I think it was. Yeah, it was. I had I think it was the first edition of this book. I think they're now on edition 16. This is the latest one I pulled up, I think, a year ago off Amazon. I actually highly recommend it. Great overview of many basic concepts in terms of the highest level strategy organization for a company. But was my introduction to the SWOT analysis, which we've been doing now for almost 60 some years. And you get the principle here. Fundamentally, it's a list of what are your internal strengths and weaknesses, and what are the external opportunities and threats facing the company. And just getting, a group of stakeholders together, your executive team, board members, whatever it is, and just thinking through a simple list like this is probably a good place to start if you haven't done it recently. But we're going to go through a framework which enables you to figure out what actions should you actually take based on the SWOT analysis. So not just doing the analysis, but also taking an action. And as Jerry said, I'm going to give you all these slides after, so you don't have to, don't have to screenshot these things or write it down. You're going to get access to all of it. So keep it simple, get a team together. Maybe it's your entire company if you're an early stage startup or whatever the case is. You can divide it into some groups, begin to brainstorm the list. Okay, your group, you take the internal strengths, you take the weaknesses, and I'm going to describe more what these mean in a couple of minutes. Another method I love, I've used so many times, is called meta planning. And again, you can either write this down right now, or you can take a look at the slides for an article or a great PDF that describes the methodology. And maybe some of you have experienced it, but it's generally done. It could be done with virtual tools. The last couple of years I've done it online, but in the old days, you did it with sticky notes on a board, and everybody, a topic is posed. For example, what are the key opportunities, the external opportunities facing my company? Everybody takes their sticky notes, writes their ideas for opportunities. You put them on the board, and then the moderator starts to group and organize them, because you start to see themes come out. Then you summarize what that theme is. You might start with 50 or 60 different notes. You end up with 5 or 6 key opportunities that have been grouped together. And then you can even do a voting exercise to prioritize them afterward. Pretty simple methodology, and one of the best group brainstorming methodologies I've ever done, and I've used it many times. So at the link, which is in that previous slide, you can find out more details on how to dive deep into making that thing work. It's called meta planning. So rather than me talk generically about SWOT analysis for the next 15 or 20 minutes, let's go into, we'll use a real example, okay? Try to use an example which is none of your businesses. I don't think there are any bakery service provider software companies in the audience here, but if there are, great for you. You're gonna have your whole strategic plan laid out in no time, all right? So this is Worbly's positioning statement. And again, we're going to talk more about positioning next time. But for mid-sized bakeries, okay, that's the target market. They're the bakery service provider. That's the category they're in, right? And what does it do? It connects your baking machines to the Internet of Things. Okay? That's what it does. What is the benefit? It drives more cost-efficient operations and higher margins. And what's the reason to believe? Over 50 leading bakeries use Worbly software, the Worbly platform today, right? So that's fundamental to what every positioning statement should contain, and we're going to dive into that more next week. But let's assume Worbly has one already. Here it is, and they now want to analyze the market and figure out what actions they should take based on that. So we're going to start with the internal factors analysis, right? Where you consider your strengths and weaknesses of Worbly. And you can see the categories of things that should be considered when somebody's looking at doing a self-assessment: R&D, production, product, organization, marketing, money. Those are some of the factors that you can consider when you're doing an IFE, an internal factors assessment. Again, I feel like I'm starting to lecture a little bit here. So any questions or comments, feel free to raise a hand or add it to the chat. So here's Worbly's internal assessment that the team got together. So on the strength side, national sales organization, they've got a lot of money in the bank. That's pretty good. Company's doing well. They understand the market. On the weaknesses side, they're not doing much in terms of demand gen. Customers take a long time to implement. Pretty decent burn rate. So that 10 million isn't going to last very long. A lot of brand recognition, and they're not a lot of employee growth. I bet you to some degree this analysis probably rings a bell with some of your companies, because a lot of early stage companies have a similar looking internal analysis. And then on the external side, so the group that's brainstorming these factors: economic, social, political, governmental, etc. It's not only about competition. And so let's go into Worbly's. And I thank you for the question about how often you should be conducting this. And we're going to get to this at the end, but I would recommend this as part of a quarterly, or at the very least an annual strategic planning process. because depending on how fast your market is moving and your business is moving, probably what you did, I look at my own business, the analysis I did 6 months ago is very different than the one I would do today. Very, very different. So maybe in an early stage company, it is maybe every 6 months, and maybe slightly more mature companies, maybe it is at an annual planning process. So here's Warbley's external analysis. Celebrity bakers are not in the market yet. Well, obviously, I created this slide deck about 1.5 years ago. Now there's celebrity bakers everywhere. So there you go. IoT dropping rapidly. On the threat side, a lot of competitive pressure for our customers, right? From the national chains, the mom and pop bakeries are going away. And let's face it, bakeries are not, generally speaking, early adopters of technology, right? Okay, it's pretty good. There's the complete SWOT analysis right there. And this is where most companies would stop. They would say, okay, we've got our SWOT analysis. Now let's move on to our pipeline call, But of course, what we should do is figure out what are we going to do about any of this. And Mason, I'm exactly going to address your question right now. How do we prioritize what the internal and external factors are? So we're going to run an IFE matrix, internal factor evaluation matrix, and an EFE matrix, external factor evaluation matrix. And it's pretty simple methodology here. Again, this could be done with meta planning, using sticky dots for votes. That you give, if something got 5 sticky dots, that might work into a 20% weighting. 1 sticky dot is a 5% weighting. There's actually lots of ways to figure out the weightings on these and the prioritizations. One thing I would say is don't let the math trip you up. I know we probably have a lot of engineers on this call who are getting stuck in the 2 decimal point accuracy. That's not really the point, right? The point is just a pretty rough estimation or ability to do that kind of prioritization and weighting, and not just a ranking, but the methodology does require an actual weighting of these things, all right? It doesn't have to add up to 1.0, but if it doesn't, then you'll have to adjust for that later when you're putting these all in the spreadsheet. So to keep it simple, I normalized it so the weightings all went to 1.0. And what are the weightings? They're trying to assess the importance of that factor to being successful in that industry. So remember, this is not really about Warbley itself. It's saying to be successful in this industry, what is the industry of baking, baking solutions for the baking industry, baking software automation solutions in the baking industry, like we just saw. How important is it to have a strong sales force with national coverage? Forget about whether Warbley has one or not yet. The question is, how important is this factor? How important is it to have a demand gen team in place? That's pretty important. This issue of long-term implementation times, not as critical an issue. Let's just get the deal done. If it takes 6 months to get them live, we're not as concerned about that. Okay, so that's the IFE. As I said, don't get bogged down in the numbers. It's not the point. And then you're going to add ratings. So is this a minor strength? Now you're talking about Warbley. Now, the first weighting factor was about success in the market. Okay, the second one is Warbley. So on a scale of 0 to 10, is this a minor strength or a minor weakness, or is this a major strength or weakness of Warbley? All right, and again, you do this probably as a group, right? You do some kind of system, and then you can multiply the weightings times the ratings. Obviously, the weaknesses, you get a negative score, because the higher the rating score, the worse that is for you. So you're getting a negative when you do that. And we ended up with a 4.6 on the positive side, a minus 2.3 on the negative side. Obviously, anything greater than 0 is good. At least your strengths outweigh your weaknesses as weighted by how important those strengths are for market success, right? So anything greater than 0 is good. So that's a start, right? But it's not the end. It's just the beginning of what we're going to do here. So keep this in mind. You've got your internal factor matrix. Now we're basically going to do the same thing for the external factors, okay? So for the opportunities and threats, how important are these opportunities, or how relevant are these threats as barriers, you might say, to driving the industry overall? And we can see that we rated some of them as being, more critical, more important opportunities. The fact that there's really there's not much in terms of bakery IoT going right now. That's just going to be a big opportunity. And on the threat side, we do see that our customers may be disappearing, right? The number of customers in the market are dropping. And now we're rating our strategies, our current strategies and tactics, okay? And it is important to understand what these weightings and ratings mean, because they're different in each part of this analysis. In this case, what we're rating is, are our strategies ineffective in taking advantage of this opportunity or ameliorating this threat? Or are they highly effective in terms of leveraging this opportunity and addressing this threat? And we can see that our current strategy is pretty effective in terms of no direct competitors. Well, we are one of the players in that space. So by definition, we're going to have a high rating on that one. We're doing pretty well on the valuations and capital availability beginning to tighten. Why? Because we just got a $10 million funding round, right? You remember back at the beginning, we got a decent amount of money in the bank. So we're doing pretty well on that one. Some of these, we have no strategy related to natural sugar substitutes. We're not doing anything related to celebrity bakers. We haven't got we haven't got a board member who's a celebrity baker, who's an investor in the company that could be the face of the company. We're getting a 0 on those because we're currently not doing anything right now related to that opportunity. And when you go down here again, we're not doing anything to address these threats to the bakery business overall today. That's why we got 0s. And of course, again, you can add up your weighted scores for the opportunities and threats. Again, there's no hard and fast rule for this, but we got a 2.9. I would say, probably overall something greater than a 5 is probably what I'd prefer to see. You can see that many of the opportunities and threats that we identified in our brainstorming, we're just not doing anything at all about right now. And overall, we've only got a couple of 8s and a couple of 5s and a 2, on the effectiveness of our strategies in terms of these opportunities and threats. And this is a pretty common scenario, because what happens is most companies create their positioning and their go-to-market strategy sort of in a vacuum, right? The founders have a great idea, everybody's busy working away, doing their thing, and whatever's happening in the external market is sort of tangential, right? That's let the market do what it's doing. I'm just going to keep focused on what I think we should do. So it's not unusual to see, after a company does this external analysis, to realize, holy mackerel, a lot of these things that we think are important, we're not even doing anything about. They're not even in our mindset until we finally did this analysis. Make sense so far? So now we're going to
sorry, Blaine, just a question there.
Please.
Panelists can't ask questions in the Q&A, so I just thought I'd put my question out there for you. What advice or guidance would you give on deciding who are the right people to have around the table for this discussion? Is it advisory board, investors, functional leads, all of the above? And then part 2 to it is, how do you look at internal versus external facilitation of these types of conversations?
Great questions. So I think these should be, to choose the panel, these should be people who, who both or either have a perspective, they understand what's going on in the company, because you're doing all these ratings of company performance against these. So if it was a totally externally focused panel, a bunch of people who just know the market, you're only going to get half the view. You're not going to be able to know how the company is doing. But the reverse of that is also true, right? If it's only an internal group that doesn't know the market space and landscape, then you're not going to have an accurate perspective. So I definitely believe in including, selective advisory board members or actual board members. Hopefully they're actually adding value. They're not just, not just giving you money, but they're smart and they know something about the space you're in if you chose them right. But yeah, and I think you're probably, 6 to 8 people is probably the maximum for this kind of exercise. Once you get beyond that, it becomes unwieldy. And then the question of who should moderate, that is a really good question. So I originally created these slides when I was doing management consulting for the VC firm. And my answer back then would have been, do not self-moderate this exercise, okay? Because it's very hard to be a contributor and to be the moderator at the same time, especially if you're the CEO or somebody that has power over other people in the room. They're not going to tell you what you want to hear. So I would try hard, unless you've done this many times and you're just naturally good at moderating these kind of things, and you can separate your moderation hat from your executive hat. I would find somebody to do it for you, and it doesn't have to be an expensive consultant. It could be just somebody smart that the CEO of another company, whatever. You can find somebody to do this for you for free or as a favor. It's probably a half-day workshop is what it takes to do this, adequately, or maybe better yet, a couple of days, a couple hours here, then a couple hours later to break it up. That's probably how I would think about it.
Awesome. Thanks, Blaine.
You're welcome. Thanks for asking the question verbally. I appreciate that. There is another question on why are weaknesses a negative? It's just because of the way the rating system worked. So because I'm saying 0 is a minor strength or weakness, 10 is a major strength or weakness, then, because 10 becomes a major weakness, that becomes a drag on us, right? That becomes a negative. If I'd have said, if I'd have changed the scale, then you could have turned this into a positive. But I'm just saying 10 makes it a major weakness. That obviously then that's going to subtract from our overall analysis of internal effectiveness. I hope that makes sense.
Hi, it's David. I get that, but why wouldn't the threats be a negative as well?
Well, let's look at that. And again, it's all based on how you're defining it. So we're saying on the rating scale, we're saying 10 means our strategies are effective in addressing that threat. So that's a positive thing, right? Because we've got very effective strategies in addressing that threat. That's why. Great question, David. I have probably one of those questions everybody else was thinking but didn't ask. So there you go. Okay, yes, right, we got this already. So the TOES matrix, it's just SWOT spelled backwards, and it's taking those factors that we looked at and trying to see how we can match them up. So how can we use some of our strengths to address some of the threats, or how can we use some of our weaknesses and threats, and what do we need to do if you combine those together? Oh my God, we really should take a strategy based on that. And so what we've done with our group brainstorming is we've identified 5 potential strategies that we think could be considered based on combining these strengths, weaknesses, opportunities, and threats. And don't worry, we're going to get back to the weightings and ratings after. Okay, so the group brainstormed these. Again, we did our meta planning exercise. We figured out, we got some ideas, we grouped them together, and we got 5 of these combined strategies. And so now let's bring it home here. So we had 5 strategies. The group decided to just remove 2 of them right off the top to keep the analysis a bit simpler. Okay. The demand gen based on a baker, that's just a tactic. Well, yeah, our marketing guy might do that. Let's take, that's not a strategy, it's more of a tactic. This thing, retooling hardware solutions with lower cost devices, that's a long-term play for us to retool the hardware component of our solution. So we just remove that right out. And now what we're left with is the weightings that we said earlier. Right? We had those weightings, we already set them, the relative importance of these opportunities, strengths, threats, strengths, and weaknesses. And then we're going to set let me go back one more. We're going to set an attractiveness score. So the attractiveness score is just a simple grade for how much impact would doing this strategy have on taking advantage of this opportunity, ameliorating the threat, building on a strength we have, or addressing a weakness we have, okay? And again, The method for figuring out these scores is not using machine learning and you know, and a big and a complex algorithm. This is just a bunch of smart, independent minds getting together, doing their private ratings, right, before you have groupthink take place, and then you start sharing your results and putting the averages up on the screen here. And I've done this exercise many times, and let me pull up, and it's worked out always very interesting. So what do we get here? We saw the attractiveness score of, so one strategy was focusing on international expansion. That obviously matches well with the fact that international markets are totally underpenetrated. So our weighted attractiveness score is 1.5 for this strategy, right? Now we do have some weaknesses. We've got no demand gen team in place. It does take a long time to implement projects, and that's not going to help us with a quick international expansion. And international expansion is going to, you know, take some money out of the burn rate, right, or add to the burn rate, I guess. So those are actually some negative elements to our weighted attractiveness score of that strategic choice. How about repositioning ourselves around an easy? It's easy, it's quick. If we made that our core positioning method, well, that also addresses some market threats and addresses one of our strengths, because the solution is actually easy. We're just not talking about that today. And then finally, the last one is saying, hey, let's focus. Their strategy is going to be to focus 100% on large bakery chains. We're going to leave the small and mid-sized bakery market unaddressed. Well, we do have a strong sales force with national coverage. We know this addresses the threat about small bakeries going away. And so where do we end up with this? Net weighted attractiveness score of 1.1 for the international. That sounded risky to me. 2.3 for the repositioning around an easy message, and 4.9 around saying, hey, let's really move our market strategy toward large bakery chains. So obviously this whole analysis is totally irrelevant to your businesses, but I can predict that if you did it, you would find some new ideas, some new approaches. And it's never as easy as saying, oh, it's a 4.9, let's do it. There are always lots of other factors, right, that need to be taken into account. But at least directionally, it can open your mind to ideas and directions that you might not have considered before. And fundamentally, taking your SWOT analysis and creating an action plan out of it. So to wrap it up for this, and then I'll take maybe final questions before we get to the talc. All of these I've talked about already, but don't sweat the numbers. Although this big spreadsheet full of numbers, this is directional, right? Is all we're talking about here. And you know, and as long as you don't get stuck in the weeds, I think you're going to find you get some interesting insights out of this thing. So I will, as I mentioned, you'll get the slides. I'll also share with you a spreadsheet that I did all these calculations in for Warbley Bakery. And so you can, you know, see the template, see how the numbers are calculated. I think it's pretty obvious for most of these things, but if you need more, you'll have the spreadsheet to start with. Even if you don't go all the way to this analysis, and I know some of you are probably thinking, no, oh my God, I would definitely at least get to this stage. Get to the TOES matrix, where you start to create some specific strategies based on your SWOT analysis. Don't just start, you know, stop back here, right? Where you just got your raw analysis. This is where most companies stop. Don't stop there. Figure out an action plan, some strategic choices, and then find a way to weight them and prioritize them, even if you don't go all the way to the complex analysis that I showed you. So any final questions about SWOT before I turn to number 2 on the list? Does this make sense?
Blaine, it's David. Question.
Yes.
So I understand why and how you'd apply this to your company as a whole. Yesterday, we had a couple of, I guess, world events that occurred in our industry that were quite significant. I'm just wondering if you ever applied this strategy to sort of an event and then analyzing what strengths and weaknesses and then what opportunities and threats are created as a result of it, so that you can start to decide to what extent this event impacts your business and perhaps how you can turn it into a positive and or prepare yourself for some other eventualities?
Great question. And in fact, I did exactly that when COVID hit. So I had a client that was doing fleet management software, initially targeting the school bus industry. Well, COVID hit, school busing stopped, and basically the whole business had to change overnight. And so we did exactly this analysis and actually a few other of the analyses as well that I'm going to show in the next few weeks to address exactly that. So back earlier when I said maybe you do it every 6 months, maybe you do it every year, absolutely it makes sense to do it after a major inflection point, major change in the market. Good. Thank you for reminding me of that. And like I said, I did that exact thing when COVID hit. That was a big hit to a lot of companies. Obviously, just changed the market dynamic, changed the internal environment. Pipelines went to zero. The whole thing almost changes for a lot of companies, right?
Yeah.
So
Great. Thank you
for reminding me about that. Okay, let's turn to talc. I like this one actually even better than the SWOT analysis because it's just, this is my Bible. So, Geoffrey Moore and Crossing the Chasm didn't invent this methodology. It was started in the 60s, actually used to measure the adoption of water purification technologies in villages in Africa. Okay, so this method about technology adoption lifecycle and crossing the chasm and all that stuff wasn't actually even invented in terms of software technology or internet technology. It had nothing to do with this whatsoever. But the fundamental premise is, you go through a life cycle to get to 100% or some high level of adoption of any technology or any system. It goes through these sort of the standard curve, right? You got the early adopters getting to the laggards at the end. And as we'll talk about, when you get to the laggards, they don't even know they're buying it, right? It's just embedded inside some other system or solution. The laggards are never going to actually buy your product or your solution, but they might buy another thing they need that has you as a part or a component of it, but we'll get there. And so this is what our friend Geoffrey did in 1991. Unfortunately, I have not ever personally met Geoffrey. I've worked with the Chasm Group 3 times now on consulting engagements where we've been helping companies figure out what to do about this. And so what I'm going to show you and talk to you about right now is sort of the methodology that I've used with the Chasm Group a few times in helping tech companies figure out how to apply this methodology. So definitely geared toward disruptive innovations. It says in B2B, but again, you can apply this methodology to water purification hardware in Africa. So I don't think I think Geoffrey Moore's book is mostly geared toward B2B technologies selling to enterprises. But the methodology we're talking about is definitely not only limited to hard B2B enterprise use cases. And the notion here is, again, you've got the early market with the innovators and early adopters. You've got the mainstream market. There's a chasm between these two because fundamentally the mainstream market buyers do not consider the early market buyers as a valuable and valid source of reference. And these guys only buy when they have references that they can look to. They do not want to go first, right? The guys on the left love going first. And if you're an early to mid-stage startup, most of your clients are probably the guys on the left. And the hypothesis is many startups fail because they can never figure out how to cross that bridge from the early adopters into the mainstream market. It's one thing to get a SaaS company to 10 million a year. It's another thing to get to 250, right? Obviously, you got to be in the mainstream market to get to 250, and it's non-trivial to cross that chasm. And then as you go into the mainstream market, you have the bowling alley where what you're trying to do, one of the methodologies to cross the chasm is to hyper-focus, right? So on the left, you're really building a solution for the wide market, any potential buyer, you want to get them to try out, do a POC, get the ball rolling. But what you fundamentally have to do here at the beginning of the early majority market is to really focus your go-to-market model, your buyers, so you can start to build a set of referenceable customers, a cluster of them. And then you gradually, after you've got that one bowling pin knocked down, that will maybe hit an adjacent pin and an adjacent pin, adjacent market subsegments until finally, you hit the tornado, the market's going crazy, the rising tide is lifting all ships, and then the market finally starts to mature, and you get the declining phase of the market. So that's the basic, that's sort of crossing the chasm in 1 minute or less. Fundamentally, I do recommend you get the 3-hour version, which is probably all it'll take you to read the book if you haven't read it recently. There's actually 3 books. This is the latest edition of the one you should all read again if you haven't read it in the last year. Inside the Tornado is the book that really focuses on, okay, once the market really starts to go crazy, that's when you choose who are the gorillas going to be in the market, who are the monkeys and chimpanzees that are going to be running around, and then who are going to be the even lower life forms. That's all sorted out in the tornado phase. So if you're in the tornado phase, you probably do want to take a look at book 2. This last book you cannot find anymore. It was the book written by the Chasm Group to help consultants implement this methodology. And then at some point about 10 years ago, somebody got smart and realized, hey, we can charge startups 250 grand to do this. Why would we publish a book that tells you how to do it? That probably doesn't make sense. So, but you can still buy a copy of this book on the used book market. You can get them. So I would actually, if you're intrigued by what you've heard on this in this little presentation here, I'd try to buy one. I know 3 of you are right now on Amazon seeing if you can find a copy. It's worth getting a copy of this book. So what are the steps in using this methodology and applying the principles of Geoffrey Moore and the talc to your company? First, you got to figure out where is your market on the talc. That's if you don't know where your market is, then obviously you can't do anything. And then based on that, make the appropriate strategic choices, right? Sounds easy. It is actually pretty easy, just not that many people actually do it. So let me tell you how to do it. So first, you use the talc stage identification checklist that I created for you. Handy dandy. I created because what you're going to see in the rest of these slides is sort of me consolidating the content from across all 3 of these reference books. Nowhere is there one single table outside of these slides that I'm going to show you that contain all this information. So you're getting, you're getting probably 50 grand of consulting for free today. What a bonus, helping my Canadian friends. So this is the checklist. So in each category, what is this? Let's take a few of them. All right. What is the state of the market? There is no market. It doesn't even exist yet. Or demand is starting to build, or demand is greater than supply. Then you're in the tornado phase. Mature supply equals demand, etc. How fast is the market growing? Very early market, probably quite slowly, starting to accelerate, hyper growth, etc. Have leaders been identified? None. Yeah, starting to get some segment leaders. Yeah, starting to be some cross-segment leaders. And this table actually continues on the next slide here. What is the state of products? Go back. Who are the prospects? What is the motivation of the prospect? Sorry, let me go back. There we go. What is the motivation of the prospect? They want to solve their particular pain, whereas the early adopters, their motivation is just to want they always want to use the latest and greatest, right? They're not really into pain solving. They just want to be on the leading edge. So the reason this table is important is, again, I'm going to get your group back together again, probably the same group that did the SWOT. And you're going to, and what I've done in the past is ask them to look at all of these factors and privately, not as a group yet, but privately state where they believe your market is in this. And it's not going to be all one category or all another. You might be, the market is actually growing pretty quickly right now, but there are absolutely no market leaders and, no direct competitors, right? Or let's say, profitability isn't low, it's actually really negative. But so what you're going to find is, as you look at the votes or opinions of the people on your panel, you're going to have your dots, on the page sort of all over the place. But in general, what I've found is you're going to find your opinions probably straddling a couple of categories, right? You might be lucky and everybody agrees, the vast majority of the characteristics of the bowling alley or the early market, that is what your market is. If it is, then great, it's crystal clear. Interestingly, maybe it's just the kind of companies I choose to work at, which are early-ish stage companies, just start in relatively early markets, just starting to mature. I've often found that I have the opinions split between the early market and the beginning of the mainstream market. And what does that tell me? That tells me this market is in the chasm, right? Because it has some characteristics of the later market, some of the earlier market, probably a good sign it's in the chasm. I don't know, probably of the 6 or 7 times I've done this, 4 times it's been in the chasm, right? But in any case, it doesn't matter. Wherever it is, at least you're going to have a perspective on that. And then the next stage is to figure out, okay, what do I do about that? So let's get to that. Okay. So like I just said, it's about, there will never be a perfect fit. There will never be perfect agreement. This is really important. So remember, we're not rating where you are in these factors. Do you have low growth? Who's your buyer? How sensitive are your buyers to price? You're trying to estimate where your market is. And there's a trick I'm playing on you here, which is challenging, right? Do you know what your market is? Have you defined what your market is, right? That's actually sort of important to be able to do this exercise. And we're actually going to talk more about that next week in the positioning session. But defining, you do need to start with everybody agreeing on what is your market, right? If you don't have that, then you could be all over the place. So start with an agreement on what your market actually is. And remember, this analysis is about your market, not about you. And this is actually why I did the SWOT analysis thing first, because that could help you in understanding who your market is and impacts and drivers of that market. Another thing, we know, let's say cloud computing generically, and it's probably the same in all your markets. Where the US is not where Europe is not where China is. I would say, in my experience, these things are coming closer and closer over the last few years. There used to be a 3 or 4 year lag between US in terms of, say, adoption of leading edge solutions. Europe was maybe 2 or 3 years behind. China was, further behind that, Japan. But I think that is compressing. I get a feel that it's compressing. I haven't seen any data on that, but I've sold in all of these markets, Asia, Europe, and North America, a lot over the last decade. And I feel it's compressing. At the same time, the situation may be different in other markets. So at least be cognizant of that. Define what geography you're thinking about when you're looking at these concepts. Come to the meeting with some background research. I think this doesn't have to be just your opinion, right? There's a lot of third-party research out there about your market, market maturity, obviously all the Gartner stuff, if you happen to be mature enough to have a subscription to Gartner, but there's a lot of free stuff out there on the internet as well that can help you. And then do the team brainstorming we were talking about. This is a big failure mode where they're seeing a lot of traction, they're getting some cool POCs and it feels really great. And they think they're in the market tornado, but they're not. They're just you're at the law of small numbers. Everything is so early that anything is 1,000% improvement over what it was last quarter. Great observation, James. So let's talk about that. This is Gartner's hype cycle, and there you go. So here's Gartner's hype cycle right here. So you see how technologies mature from their basic inception. Then everybody gets all super excited, and then they realize, it's not as easy as I thought it was, and eventually, hopefully, you get to a productive place. And these cycles are related, right? So the early adopters tend to be really excited. You get some initial growth, and then the chasm. Another way to think about the chasm is disillusionment, the early majority has a lot higher expectations. They will not engage in science experiments. They don't want to learn, right? They want their businesses to benefit, actually drive real value. And if they don't see that immediately, they're disillusioned. And that's where Gartner's hype cycle comes in. So if you are lucky enough to have access to industry reports like Gartner's hype cycle stuff, that is definitely a good indication of where your market probably is in terms of the technology adoption life cycle. James, next time you're going to do this presentation, you're on it, man. Okay. So the next thing we can do here is look at who the buyer personas are that are relative to each of these stages of the life cycle. So remember, you know who your stage is. So now your marketing and sales folks and you, CEO, everybody are probably thinking about, okay, tell me about the characteristics of my buyer. Help me message to them, sell to them more efficiently and effectively. And so this table really describes it. So let's say, for example, you're in the scenario where I'm painting out here, you're in the bowling alley, you're just in the early majority market, okay? So these are pragmatic buyers, right? They don't want revolution, they want evolution. So your messaging shouldn't be about, we're going to change your world, right? The messaging should be about, we're going to make your business better. We're going to drive a real benefit to you today, right? In the long run, because they're not buying for the moment, like the tech enthusiasts and visionaries, they're buying for the long run. They will accept some risk, but they also want to feel you're a winner, right? So this is why, as Thierry said at the beginning, last week we won the Edge Computing Startup of the Year Award from Edge Computing World. Trust me, I am focusing very hard on telling that message now to the market, because these buyers really want to get a sense of who the winners are. They're not willing to have high risk of failure, et cetera. You can read the table for yourself, but depending on where your market is, you can understand your buyer personas a lot better, and then make sure your messaging achieves that properly. All right, finally, what do you do about it? What are the implications? Another way to think about it is, what strategies should you put in place if you've identified that you're in a particular bowling area? So the example I'm going to give is specific to a company or a market that is just in the early majority stage. Okay, what should you do if that's where your market is? Now, in the back of the slide deck, I've actually got slides for all of the market stages. So once you've identified where your market is, then I've got the sort of the framework to use for every single stage. It's too much information for one slide here, but it's all in the details of the slide deck. So again, let's take this example of an early majority company or early majority market. So now you can begin to expand to multiple targets. Remember, to cross the chasm, you needed to really be focused on one particular sub-market segment to build referenceable customers in that segment. But the market has matured a bit. You can begin to expand to adjacent segments in this case. You can also begin to claim that you are the leader, right, in multiple segments, not just one single segment. Let's see. Obviously, we saw the persona of the pragmatic buyers in the previous slide. So that's who you're going to be directing your messaging to, and you want to use those guys as references. This is really hard, right? Many tech companies want to use, oh man, we ran all these great POCs at these early customers. They're friends of the company. Should I be using them as my source of reference? Well, the answer is probably not, unless they are really good at coming off as somebody who is a mainstream buyer, who's not an early adopter, somebody who can, act like one of these later buyers. And maybe some of your friends of the company that bought from you can do that, but I'll tell you, many can't, especially if they're more technical people. Technical people aren't really good at telling stories like this, right? Storytelling tend not to be, not always. So what's your competitive advantage here? you can now, it's important to start claiming you're not only the product leader, but that you are the best for the customer. The early adopters care about the latest technology. They care about the coolest features, right? The early majority cares a lot less about that right now. And, moving down the list. So like I said, the content I've got here has these, success factors laid out for every single section of the technology adoption lifecycle curve. So, okay. Maybe one other thing, maybe to address the question that came in, and then I'll wrap it up with a last comment, which is, well, you know what? Let me see if I can show you something. So the question was, strategy was to partner with a Gartner Magic top quadrant company that has a complementary offering. And another element of this, which I'm not diving into too much in this presentation, is the whole product. So in fact, here we go. So it says whole product required. So as you move from the left to the right, companies on the left in the earlier markets are totally fine to have just one piece of the puzzle. Okay, just one technology component. But as you get toward the right, they need everything. They need it all bundled or packaged together, right? They don't want to be assembling any parts of the solution themselves, right? Even if you've got a cloud-based software solution for cloud healthcare, there may be other components, other things you need for the customer to actually get the full value. And as you move along to the right, they need to see all that value packaged together into what's called the whole product. And in fact, when you get all the way to the right, you're not even buying the product at all anymore. You're just, the solution is just embedded as part of an entirely different solution. And so the question was brought up about partnering with another company. Usually it does require partnerships to bring whole products to market. And so that's a really important point, which is a sort of a whole nother area that we're not gonna have time to dive into today. Maybe we will a little bit next week. The final thing I wanted to talk about in terms of this was, okay, I mentioned that you have to target one, to cross the chasm, you need to find one, very specific target market to address. And when I think of a target market, it may be an industry, or it may even be an industry in the context of a particular use case. Like even energy, for example, might be too big, right? But predictive maintenance applications for energy, that might be a market segment that is specific enough that you could get referenceable customers and then expand to other use cases in the energy industry. Or maybe you focus on one particular use case for the energy industry, predictive maintenance, but then you expand predictive maintenance into smart cities, into manufacturing, into other industry segments. So you can see there's a way of expanding by market segment or by use case, and there's two ways you could hit sort of adjacent pins depending on which way you want to go. But this is the methodology anyway that the group puts forward for helping to prioritize which of these bowling pins you should work on first. Is there a single identified buyer? How compelling is the reason to buy? Do we have the whole product in place? How strong is the competition in each of these potential market segments you could address? And again, where do the numbers come from? The numbers come from our trusty group of advisors assigning scores, 0 to 5, whatever your rating scale is, it doesn't really matter. But that's how we come up with this. And again, I've used this methodology many times with myself and with clients to help us figure out, that we really should be attracting or addressing the energy market with our solution right now. Probably healthcare is a little too far away. There are no adjacent markets. The pricing isn't right for it, whatever the case is. So simple framework like this to help you select bowling pins to address. I think I'm actually done here. Let me see. All right, so there you go. To wrap it up, it's never a perfect fit and it's always changing. So, don't assume that the market analysis you did last year is the same one. Obviously, the market is maturing over time. Some markets mature very quickly, others much more slowly. And as the market changes, the positioning of your company needs to fundamentally change, right? Who is it for? Who are you selling to? What's the value? How do you message the value, right? Don't stick with a failure mode is to stick very hard with one positioning, and then meanwhile the market has moved on. On the other hand, don't blame your lack of success on the market stage necessarily. Well, it's an immature market. Blaine said it's supposed to have no profitability and low growth, so I guess we're okay, right? No, it might not be the market, it might just be you. So be careful about that. As I said, geo, company size, industry, focus, focus, focus. My favorite sentence in Crossing the Chasm is this one right here. Why do most startups fail? They fail for this reason, right? We do not have, nor are we willing to adopt any discipline that would ever require us to stop pursuing any sale at any time for any reason. It's so hard not to try to go wide in the early days and appeal to every customer in every market with every need and use case. But you might get lucky, and if just time the market exactly right and the rising tide is going to lift your ship. More than likely, though, you're going to have a hard time with this strategy. And of course, everybody says focus is the key to success. And if I had $1 for every time I told somebody to do that, I'd probably be on my yacht right now instead of in the mountains south of Lake Tahoe. And then the last point, yes, facilitating. This one's a little trickier, I think, than the SWOT analysis. But I think, again, an intelligent person who's a good facilitator could help just do the mechanics of the voting and putting the dots on the right stage. You probably, again, don't want the CEO to be doing this, or a person in a position of thought leadership power over the organization. You might not get the result you're looking for. And there we go. Oh, just so you know, in the appendix, as I mentioned, I think you can still see this. We've got slides that look at the implications for the early market. Come on, slides. The chasm. We looked at the bowling alley already, the tornado, Main Street, and the mature end of the market. So no matter where your market is, I think there's some wisdom to come out of this analysis and this framework. So that's it. I'm done. I'm done showing slides. Questions, comments? Did you find this useful? Are you scared shitless? What do you think? Don't be shy.
And for those who are interested in doing this work, you will have the opportunity to do that with Sean Shepard, who will be facilitating a session on the 26th, I believe. So he'll go over his session, and then he'll make himself available to address some of the topic that Blaine is going over right now over the next 3 sessions.
Interesting. Can I hire him too? Can Sean?
Well, he said he wasn't available.
Oh, okay. All right.
I have a comment. I find the hardest part is really after realizing you have to focus, right, is keeping the stakeholders and the team aligned, right? I find the alignment part is the hardest part, because I see from my role certain aspects in the market. My CTO sees certain stuff in the tech world, and everybody sees different things. And although you kind of agreed on this thing, the market pulls you, right, in your respective role. And I don't know, I just find that one thing that trying to do that we helped is making sure that that communication thing, and then with this hybrid work environment, is made it a lot harder. So as much as this is correct, there's other problems that I find are making it hard to meet this type of constant SWOT analysis.
I agree. And sales, I think, is the #1 culprit in pulling. I see 2 culprits. One is sales. They want to get any deal done, right? They're motivated to get deal done. They don't care about technology adoption lifecycle curves. If somebody's going to do a $50,000 deal and they're going to get a 20% commission, that's what's going to happen, right? And so that's why I definitely do recommend including sales, certainly sales leadership anyway, in these workshops and discussions, because if sales fundamentally believes that, hey, the way we're going to win in the medium and long run is by focusing and by building a set of referenceable customers, then it's in their interest. I've just gone through a similar analysis, which, you know, I've got an application platform that could be used by any industry. Everybody's moving to the edge. And I've recently focused the company on the energy industry. That wasn't my talc analysis. That was a different company, but I've also focused the company on the energy industry. And I've worked very hard to enroll sales in that decision. So they're not fighting me all the way, but they actually realize this is in their interest for them to do this. Of course, and then I'll answer the next question. The other reason, though, the strategy often fails is the CEO. CEOs are infamous for being like dogs with the squirrel running by. Oh, there's a new squirrel, right? Whatever the hottest next thing is. They're, in my experience, maybe it's just Silicon Valley, maybe it's not Canadian CEOs, but it's very hard for companies not to be whipsawed by CEOs with the next great idea. So if you are one of those people, be very careful with your power. Somebody has their hand up there. Oh, it looks like Mike.
Yeah, so we're definitely in the stage where we have a lot of different types of industries and a lot of different types of customers using our product. And we're now just starting to focus on, okay, who is the ICP that we should really go after first, and really put some focus on a particular role and job title, especially from that economic purchaser perspective. What kind of timeline do you think is appropriate for going after a particular ICP, and then deciding to loop back on the other ICPs if that one doesn't work? Like, what kind of sprint would you recommend for that?
Yeah, a lot of this is about, you have a hypothesis, right? For who to go after, for how to position the company, for who the target buyer is, all of these things. And in the early stage of the company, and especially in early markets, in particular, in early markets for early companies, you want to have not just one iron in the fire. Like I wouldn't just say, okay, we're going to focus on this buyer with this message for the next 6 months, and then we're going to move to the next one, because you don't have enough time, right, and runway and bandwidth to do all these things. So I would take an educated attempt at how to spread yourself out a little bit and run a few concurrent hypotheses. Now, if the market is more mature, though, then you should have enough information to be able to say, okay, we know who the buyer is. If you shouldn't have to guess or run experiments, we can learn from competitors, from what the analysts and others are saying. And then at that point, I would say, if you're not seeing, you set specific KPIs, if you're not seeing the traction you expect in, call it 3 to 6 months, then probably there's something, you either pick the wrong one, or you're not operating with excellence, right? You're just not able to execute against it. So to summarize that answer, early markets, early stage companies, you do have to go wide, run some concurrent stories. On later stage markets, pick one, focus, or pick a couple, focus, and be ready to pivot, right? And that's exactly what I'm doing with the energy market. That's my main focus right now, with a particular set of buyers in that space. But I've got a couple of other ideas waiting in the wings. So we're not going to be held up too much if that doesn't work out the way I thought it was going to work out. Hard to have a generic answer to the question, because it's very specific to every company, but that's my high level answer anyway.
No, perfect. Thank you.
Anybody else? Great. Well, great questions. I really appreciate your time. I think there was a question about SREDC and NRC and all those programs compared to the US. My short answer is, I have no idea. I've never used any of these programs either in Canada or the US, and I'm not saying you shouldn't. If they're available, by all means, take advantage. If you can get low cost, investment in a company, especially without them taking an equity stake, I would say go for it. I will say I have avoided most of these there are federal programs in the US, research grants, these kind of things. My philosophy has always been the time it would take me to apply and run in that program is more than the benefit I would get out of it. But those are US programs. I have no idea what the Canadian programs are, and maybe you should absolutely take a hard look at them. We probably have time for one more question. Looks like Colin has his hand up.
Hi.
Yeah.
Yeah.
Yes, there we go.
So we're like in an early stage market. We sell to education. So our sales window is like super tiny. It's like twice a year. And the sales are super small. And it's just so frustrating to try to push on someone who's buying something without their own money and not really shopping. So do you have any experience in the B2G world?
Well, in fact, so my wife is the VP of product at an ed tech software company here in the Valley. And so she'd be much better to answer the question than I would, but she's not here right now. But I think the short version is their company and many education related companies are finding a way to use COVID as a huge accelerator, right? Not as a decelerator, but how can you reposition the offering, the value proposition because of this rapid evolution that's going on in terms of how education operates right now, whether it's, education from home or tutoring so I know, I'm pretty familiar to the ed tech space because of all this time I spent talking to my wife about it. And most of the companies, she's been in this for the last 20 years, most of the companies that I know of in that space are really using this, back to my earlier thing, as an inflection point in their business, reassessing their business model, their product offering. So I've got no idea what yours is, but I would just say that whole ed space is changing so quickly. Make sure you're skating to where the puck is going, not where the puck is today. That's my challenge to you, I guess, right? As my friend Wayne used to say. And guys, I think unfortunately we are out of time. I have to prepare with a meeting with the VC actually in 2 minutes. Have a drink of water, get my throat reset, and go to try to raise my Series A round at the end of Q1 of this year. So we're all in it together, right? We're all doing this journey together. But hopefully you got something out of what I had to say today. And if you're able to make some of the future ones, be happy to continue the conversation.
Thank you so much. Thank you so much, Blaine. And James, if you can send me the question, I can forward it to Blaine, and he will be able to answer you.
Absolutely. Oh, and by the way, you guys link in with me on LinkedIn,
yep.
And feel free to send me a message directly on LinkedIn. That's perfectly fine. But just remember, I'm not a startup consultant anymore. I am a CEO running my own business. So if you don't get a long dissertation for an answer, that's probably why. All right.
Thank you, everyone.
All right, guys. Bye-bye.
Bye-bye.